My friends, you are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 13th of March, 2017. As we ended the week on Friday, everything is up. Our two indexes, the S&P 500 is depicted by SPY, up at the end of the week. We see that the Qs, the Nasdaq 100, is up. We also see that even though it took a trouncing at the beginning of the week and throughout the week, on Friday up just a little bit. TLT, the 20-year bond, 0.35%, and gold recovered just a little bit on Friday. Let's jump into what's really going on overall, figure out where things have come from and where they might be headed based upon our charts and trend following. What do we see going on SPY on our weekly chart as we really delve into things? Well, we see a flattening of the PPO, the price percent oscillator. That is a blue line on our charts. Those you're not familiar with the price percent oscillator, somewhat akin, well, it's very akin to the MACD, the moving average convergence divergence indicator, except it's better. And we've got some great training at the website to find out more about that. What do we see going on? Well, the derivative oscillators continued to gain energy, even with a rollback as far as price movement goes. We have seen a stalling over the course of the last week. It is our first red open box candle, red candle of any kind in 6 full weeks. So we are seeing maybe a flattening out, could be a rolling over, hasn't happened yet. We do see the PPO flattening out, and we don't see nearly as much of a climb in the last week on the S&P 500. So we're looking at some stalling. Now, this is interesting to look at. If you look at what we see going on, we have almost, in fact, it recovered a little bit. It was getting close to crossing over, very, very close on the S&P 500 going down. Derivative oscillator still losing energy. Did have a spinning green top for the last 2-day candle for the week. We've actually closed out that candle. Actually, we had a red spinning top, open box, on the 2-day candle ending on the 6th. Now, when we start talking about spinning tops and such, red, of course, means down. Spinning top means indecision. So we've seen indecision pretty much over the last 3 candles, representing 6 days of movement. Our last big up candle was all the way back on Thursday, the 2nd of March. So we've been losing energy on the S&P 500. Hasn't crossed over yet. May do so over the course of the next week. One never knows. If that does occur, then we will, of course, pay close attention to that, meaning that our run-up as far as the 2-day chart has ended since it crossed over going up on the 10th to parallel, I'm sorry, that's all the way back on the 10th of February to parallel the up movement that we have seen on the weekly chart, which tracks all the way back. We gotta go way back, my friends, all the way back to Thanksgiving time, the 25th or so of November 2016. So we've continued to see lots of strong up movement. Maybe we're going to see that finally coming to an end. We'll just have to wait and see. Pay attention to that over the course of the next week. Now, what's going on the Qs? Oh, for the day, the S&P 500 up 0.35%. The Qs, the Nasdaq 100, tech stocks, they continue to zoom up. We continue to have another week of up movement. As far as the candlesticks go, we now have, oh my gosh, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks of straight up movement. Actually, if you check out when we had our last vertical crossover back on the week ending the 6th of January, when we jumped in that following Monday, continued up movement since then. We do see a little bit of weakening. We see the derivative oscillator is actually starting to back off some, and we see some flattening out of the PPO. But again, still green candlesticks going up. Continue to watch that. Actually, we've got to sort of redraw. We're not going up as strong as we were. We have to redraw our trend line for the weekly. We're not still in keeping with the way it was, but we've been able to connect 3 candles, close to 5 candles, but not quite. So we're seeing as we go into the 2-day chart, you're seeing some weakening. We were truly expecting the cues to cross over going down throughout the course of the last 2-day candle. Didn't manage to do it because it ticked up on Friday. So again, we don't try to guess what the market's going to do. We let the trend changes tell us, and the trend hasn't quite changed yet. Derivative oscillators lost a lot of its energy over the last several 2-day candles, but not quite crossed over going down yet. Still has some strength and energy in it. So be cognizant of that and careful about it. We look at our 2-day charts. What do we see? Well, the 2-day chart did bump over and then sort of lost that energy as the day wore on the 10th. Actually bumped up high in the morning and then sort of lost it, tried to recover toward the end of the day. Technically, yes, up 0.42%. So continue to keep an eye on that. Those of you who wanted to try the traditional method, jumping in after that candle closed around 10, 11 p.m., you are in it. You can sure continue to monitor it. Saw the derivative oscillator heat up at the end of the day along with the PPO, so continue to watch that. You are doing the traditional method and it should work for you. Why? Well, we have still technically, we're up. I just would be very, very careful because we are so long in the tooth. If things take off and go higher, you might feel good about it, but I would just, as we've said, lots of caution when we're this far along because it sure looks like we've got a crossover coming down on that powerful 2-day chart. Not as powerful as the weekly, but over the course of the next week, it may breach through that weekly trend line. Of course, when we do have a weekly vertical change, vertical crossover, we will let you know. Has not happened yet. Let's keep going. Going to go back to the weekly chart. We're going to look at TLT, the 20-year bond fund. Of course, it is still in a confirmed up move on the weekly chart. Got a little schizophrenia going on because we have had a big down week on the weekly chart, and we have had a crossover going down back on the 2-day candle ending on Wednesday the 8th, after actually 4 closed candles now going down on the 2-day chart for the 20-year bond fund. And we have schizophrenia underway, means that the weekly chart's going up. 2-day chart's now going down, so we are waiting for that weekly vertical crossover to occur, if and when that does occur, allowing us a jumping in point on another weekly vertical crossover. This one, of course, will be going down if indeed that occurs. We will continue to watch for it. We will, of course, notify you of it. Bonds had tried to recover. We had a good bond play at the beginning of the crossover going up on the weekly chart. Did not last very long and has rotated back over. Will bonds go below where they hit around 117.30? We'll see if there's a floor there. Could be, could bounce off that. We'll just continue to watch. Still technically in an up move on that weekly chart when it comes to bonds. Now, lastly, and for the day, up 0.35% for bonds. Gold up 0.22% after a big, strong down week. We see that the PPO has tipped over. Derivative oscillator losing energy. Hasn't crossed over yet. It's got a ways to go on that weekly chart, but it is getting weak. Bonds are still, gold is still technically up from that weekly vertical crossover all the way back on the 27th of January. And what do we see on our 2-day chart when it comes to gold? Gold crossed over. We have a vertical crossover going down on gold back on the 2-day chart ending on the 8th. That was Wednesday, the 8th of March. And we have 4 2-day candles. And again, that last 2-day candle, even with the up movement on Friday, for Thursday and Friday, shows down movement. So we'll continue to watch gold, even with a little bit of a recovery there on Friday. We still have strong down moves underway. So again, when we have change in directions and we have that certified by a weekly vertical crossover. All of you who currently have subscribed to our text notification service, how do you do that? You simply text the words Charting Wealth. That's Charting Wealth. That's our name. One word though. Text that word to 33222 on your cell phone. The number's 33222. Dial that on your text and then text to us. Charting Wealth will put you on our list. And as soon as these weekly vertical crossovers occur, we will get that information off to you. If you've not already seen the incredible successes we had in the months of January and February, thanks to these weekly vertical crossovers, what were the gains? 15.04% for our virtual trades. That's what we want you to practice, folks. Doing things the right way, the smart way. And these weekly vertical crossovers that we have discovered are a great, great way to do it. They have been working wonderfully well. When the market inverses and goes in the other direction, we have inverse funds that we can trade. There's an inverse of gold. In fact, there's several. There's an inverse of the 20-year bond. Somebody asked me about that the other day. I gave them one of several different funds. There's a reverse of the S&P, such as SH. There's also a reverse of the Qs, several of them. There's a double reverse QID that I've practiced many times in the past. So again, we think out of the box. We try to play three-dimensional chess instead of two-dimensional checkers. Everything we want to do is to make sure that we can track this market going up, sideways, or down, and we want to be smart about knowing what's going on. If you've not already subscribed to our podcast, you need to do so. How do you do that, and how do you get the things that we have to offer to you for free? Well, you go to chartingwealth.com, you put in your name, your email address, and we will send you our weekly market worksheet that hopefully all of our long-term fans have filled out as they have been listening to this podcast. We'll also send you a link to our daily market worksheet that you fill out the rest of the days during the week. It's only this comprehensive review and forecast that comes out once a week that you fill out the weekly market worksheet. Otherwise, use the daily market worksheet. Takes you about 10 minutes, my friends. It's the most valuable 10 minutes as you listen to this podcast that you fill out. It gives you a trading diary. It gives you things to fall back on. It makes you think about what you're hearing. And when you put pen to paper, it is magical. It will supercharge your training. Now, what else do you get when you subscribe? You also get the layout that we use at freestockcharts.com, and you get our How to Read a Stock Chart video, a link to that. We want you to have all these things. We want you to practice with us. If you really want to know how the stock market works and learn what we teach and get good at reading these stock charts and be able to discuss the market intelligently with people and help trend follow and figure out when it makes sense to enter and exit the market, this is what you need, my friends. And you know what it'll cost you? 10 minutes a day. If you're not willing to spend that, don't bother to sign up. We don't want you. You're wasting your time and your energy. But if you do care, if you would like at some point in your life to have either financial freedom, early retirement, or a lot more financial freedom, then you need to join us every day. We ask you to do a couple of things if you'd like to help us out. Go to iTunes, subscribe to our podcast, give us a nice 5-star rating, say something nice about us. We would so appreciate that. You guys have made us as high in the world as number 6 in stock market podcasts, and I just checked recently, we're as high as number 9 in the world for stock trading podcast. Guys, you have done that for us and given us those kind of metrics, and we so appreciate it. We also appreciate the 2,000 now subscribers that we have at YouTube. Please, if you're not a subscriber already, go there and subscribe to our podcast. Also, you can also find us on Facebook, Twitter, Instagram, YouTube, you name it. We try to be there for you. We'd love to hear from you. You want to write us, ask us questions. Don't ask us about real trades that you are in. We are not a stock calling service. We're an education firm. We will be happy to share information with you. Lots of good training at the website for you to virtually trade and practice, but we do not give market advice. We're not going to give you real-time advice on whether you should get into real trades or not. We do not do that. We do not take on that kind of liability. What we want you to do is learn how this market works, learn how to trade, and then when you take all the knowledge you've amassed and all the experience, the books you've read, the other people you've trained with, whatever you've done, and you put all that together and you can actually read a stock chart, make your own decisions, my friends, that is when and only when you should even consider using your own money and getting into the market. But you got to practice first, and perfect practice makes perfect. You got to practice with us every day. That's why we so encourage you to do that. Now, lastly, let's go over what's going on this calendar for the next week. Nothing really on the calendar for Monday the 13th. We do see on Tuesday the Producer Price Index. Now, we have people say, what a PPI? What does CPI mean? Well, PPI is a family of indexes that measures the average change in the selling price received from domestic producers over time. So again, it lets us know literally what's happening with producer prices, and that's going to be released on Tuesday the 14th. You might say, what does that have to do with the market? How does it affect things? Typically in the market that we're in right now, if it's really, really good or really, really bad, it might have some effect. But again, what the market's really waiting on is not even the consumer price index that's coming out the following day on Wednesday. And again, folks ask about that. What's the consumer price index? Well, that's really just a measure of the weighted average of prices in sort of a basket of consumer goods and services, things like transportation costs, food costs, medical care. And then it measures, well, what is the CPI for this month compared to what it was last month? So again, it's just sort of a basket of what consumers are paying on things. And again, that's really, really good or really, really bad, or it's trending a certain way. It can affect the market either in a good or bad way. But what's really going to affect it is going to be what happens on Wednesday with interest rates decision by who? The almighty, all-powerful, and I say that tongue-in-cheek. Only the good Lord's almighty and all-powerful. The Federal Reserve has way too much power, but they call the shots in so many ways on our economy. Just my personal feelings, but they do call the shots. And Janet Yellen is going to be having a big press conference around 2 p.m. when they release their interest rate decision. That will affect things. They're going to give their economic projections at the same time. So again, get ready for that to affect the market. Be very careful if you are in trades, in investments at that time and again, we're talking about your virtual trades, but watch how the Fed affects those kind of things, because when you are trading for real, you need to be very cognizant and aware of the effect the Federal Reserve has on the markets. It can kill what was a good trade. It could make a bad trade a good trade. That's not the way you want to trade, though, not the way you want to invest on a wing and a prayer. That is foolish gambling, and the house typically wins. That's how they build all those beautiful hotels, and everything else in Vegas is on suckers. You do not want to be a sucker. You want to make sure that you protect yourself. Going through Fed meetings is a very dangerous thing. But again, you're practicing. You can see how that plays itself out and if things recover and when they do. So again, watch and learn. And then lastly for the week, on Thursday the 16th, the U.S. is going to release new residential construction, housing starts, and building permits. So we'll see how that goes. That's really good or bad. It could have some impact, but the big story is going to be that 2 p.m. meeting of the Feds on Wednesday, the 15th. Folks, that's where we are as we end the day. Like I said, you want to get text messaging of our weekly vertical crossovers when they occur. You got to get on that list. Text the words Charting Wealth, actually just one word, Charting Wealth, to 33222, the numbers 33222. We'll put you on that list. It will be 6 or less texts a month. Nobody's going to start firing off crazy stuff to you. You know we don't send you junk mail. We never have. We never will. We don't do that. We're not about to send you junk texts. We do love to hear from you, my friends. Thank you so much for all the kind words you always share with us and the thanks. We're here for you. We always want to hear from you. We want to help you. We want to hear your success stories, and we'll also hear the things that aren't so good, and we'll try to help lead you in the right direction, and your questions may result in a good training scenario for us to put out. God bless. Take care. Hope that you are enjoying or have enjoyed or about to enjoy a great weekend. Take care. All the best from chartingwealth.com.